Hey everyone, welcome back to Corporate Decoder, the place where we unpack the hidden stories within financial filings. Today we're diving into a significant leadership shuffle at the Carlyle Group Inc. because it looks like they're prepping for a big leadership switcheroo that could shape their future direction. Before we get into the nitty gritty, if you love getting these plain English breakdowns of complex corporate moves, make sure you're subscribed. And if you want to connect with other finance enthusiasts and get early access to our analysis, join our Discord community linked right in the description below. So the big news here is a major shakeup in the executive suite of the Carlyle Group. Starting at the beginning of next year, they're essentially bringing in a new troika to lead the charge as co-presidents. John Redett, who's currently the Chief Financial Officer and steers their corporate strategy, will be taking on this new role. He'll also be heading up their global private equity business, which includes corporate private equity and real assets. Alongside John, Mark Jenkins, who's the current head of global credit, and Jeff Nettleman, who leads their global client business, will also step into these co-president roles. Mark will be leading the global credit and insurance business, and Jeff will continue to steer the global client business, which is all about managing relationships with their investors. It's interesting that John Redett will stay on as CFO and head of corporate strategy through the end of this year, meaning he's juggling a lot before the big transition. But that's not all. They're also bringing in a new Chief Financial Officer, Justin Plouffe, who's currently the Deputy Chief Investment Officer for Global Credit. He'll be stepping into the CFO shoes come January 1st next year and will continue in his current Deputy CIO role until then. This signifies a big move for the Global Credit Division, promoting from within for such a critical financial role. Let's take a closer look at John Redett. He's been with Carlyle since 2007, initially as an investor in financial services. He's been the CFO since October 2023, so relatively new to that specific role, but has a deep history within the company, leading various financial services sector like Duff & Phelps and Bank United. Before Carlyle, he was at Goldman Sachs and JP Morgan, so he definitely has a solid Wall Street background. Now, Mark Jenkins. He joined Carlyle in 2016 and before that held senior positions at CPPIB, which is the Canada Pension Plan Investment Board. He was instrumental in building their credit investments platform and even managed their acquisition of Antares Capital, a big name in middle market lending. He also has extensive experience from his time at Barclays Capital and spent over a decade at Goldman Sachs in their fixed income and financing groups. His background is heavily weighted towards credit and debt markets. And Jeff Nettleman, he's the newer one to the Carlyle team, joining in 2023. Prior to that, he was a partner at Cetares, a firm focused on travel and hospitality investments, and before that spent over 25 years at Goldman Sachs. At Goldman, he held senior roles in global equities, prime services, and equity sales. His expertise is clearly in managing client relationships and driving business growth across different investor segments. Now, for Justin Plouffe, the incoming CFO, he's been with Carlyle since 2007, focusing on credit strategies and growth for their global credit platform. He's a portfolio manager for several credit funds and also holds CEO roles for some of Carlyle's affiliated business development companies like Carlyle Secured Lending and Carlyle Credit Solutions. This shows he's deeply involved in the operational and financial aspects of their credit business, which makes him a logical choice for CFO. He's also a lawyer by training, having worked at Ropes & Gray and even clerked for a federal appeals court judge. That legal background can be pretty handy when dealing with complex financial regulations. It's worth noting that all these individuals are significant investors themselves in Carlyle's funds, which is pretty common for senior executives. It aligns their interests with those of the investors. They'll also be entering into standard indemnification agreements, which is a normal practice to protect executives from personal liability related to company matters. The company also mentioned that a press release detailing these changes has been filed, which is basically a formal announcement to keep everyone informed. And we can find that press release attached as an exhibit to this filing. This report is signed by Jeffrey W. Ferguson, who serves as the General Counsel. This is a standard signature for these types of SEC filings, essentially confirming the accuracy of the information presented. Okay, so what does this all mean for Carlyle? This move to a co-president structure with distinct areas of focus for each president suggests Carlyle is looking to decentralize leadership a bit and bring more specialized expertise to the top operational roles. Redet taking on global private equity, Jenkins leading global credit and insurance, and Nettleman continuing with global client business. Shows a clear division of responsibilities. This could lead to more focused strategies within each of these major business segments. The promotion of Justin Plouffe to CFO, a long-time Carlyle insider with deep credit experience, signals a desire for continuity and a solid understanding of the firm's financial operations, especially given the current economic climate. It's a vote of confidence in his ability to manage the company's finances moving forward. The timing of this announcement, with the changes taking effect at the start of next year, gives the company ample time to manage the transition smoothly. It appears Carlyle is proactively positioning its leadership team for future growth and to navigate potential market challenges. From a broader perspective, this signifies a maturing of the firm, with a clear succession plan being put in place for key leadership positions. The focus on having leaders with deep experience in their respective business areas like Redet in private equity, Jenkins in credit, and Nettleman in client relations should reinforce Carlyle's competitive advantages. Now, while this report is primarily about leadership changes, it's always good to think about how these moves align with the company's overall financial health and strategy. Carlyle is a major player in the alternative asset management industry, competing with giants like Blackstone and KKR. Their success hinges on attracting capital from institutional investors and performing well across their different investment strategies. These leadership changes seem designed to ensure that strong operational leaders are in place to drive that performance and investor confidence. Looking at Carlyle's broader financial picture, which we typically find in their quarterly or annual reports, these leadership moves are a crucial piece of the puzzle for how they plan to execute their business strategy. A cohesive and experienced leadership team is fundamental to attracting and managing the trillions of dollars in assets under management that firms like Carlyle handle. The stability and clear direction provided by these appointments should be reassuring to investors. So what's my take on this? Carlyle is making a strategic move to strengthen its leadership, bringing in experienced hands to guide different parts of their vast business. It signals a focus on specialized expertise and a well thought out succession plan, which are generally positive signs for any company. The real test will be how effectively this new leadership team executes its strategies, especially in what could be a challenging economic environment for alternative asset managers. Alright, that's our breakdown of the Carlyle Group's latest leadership announcement. What's your take on these big changes and what they signal for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and don't forget to subscribe for more deep dives into the world of corporate finance. And hey, if you want to join the conversation with other finance enthusiasts, check out our Discord community. The link is in the description. Thanks for watching, and we'll see you next time on Corporate Decoder.